Hello, everyone. Steve O'Brien with Redefy Real Estate. It is November 19th, and just wanted to give you a market update. Right now, I get a lot of questions about the market. How are interest rates affecting the market? Are homes selling? What's the buyer leverage right now? What's the seller leverage? So I have some data from our local MLS that I think would be interesting and would be helpful to try to digest analytically what's going on. Share my screen. Okay, give me a minute. First thing that I think is important to look at, there we go, is the inventory levels. Right now in our MLS, we have about 4,000 houses for sale. What does that mean? That means there's not a lot of houses for buyers to buy. I don't know the exact range that you want to be in to get to more of a neutral market where there's a good balance of buyer and seller. But if you look at this, at the time frames here, back in 2015, let's say you had around 12,000 homes on the market. And then every year after that, it's just kept steadily dropping. I don't have the data prior to that, but I'm assuming it's much higher. 2012 was kind of a 2010 to 2012 was kind of a extreme buyer's market, if I can remember correctly. So 2015 is kind of when it started to change. You know, obviously you can see things start to pick up. Let's see here. So we get to October of 2022, and there's around 4,000 homes for sale. That's just not a lot of houses for buyers. Now, there's another stat that I have to show you. I'm going to see if I can jump to this next thing here. The number of buyers has dropped by, say, 30%, or number of pending sales, number of settled sales for October over last year has dropped around 30%. So what does this mean? We still have low inventory relative to the past. So sellers still have a product that is scarce. We also have buyers levels have dropped, or we'll say again, pending sales, settled sales have dropped by 30%. Doesn't mean there's not a lot of buyers out there looking or whatever, but the number of sales has dropped. So I'm going to equate that to buyer activity has dropped down because our inventory levels are there's around 4,000 houses, but we can see that October of last year, so we're down 30% the number of buyers or pending sales over last year. And then last year, our inventory level was 4,000. So it's at the same level. We're at the same level last year of homes on the market as we are this year, yet there's 30% less transactions. So it's not that there's less listings, it's that there's the same exact number of listings. What is interesting is we didn't see inventory levels spike up in July the way they normally would. And we'll probably see this kind of tail off and drop down a little bit November, December. Just listing activity typically falls off a little bit during those times because of the holidays and people just aren't moving. So does buyer activity. So let me get back to that other chart. So we know that buyer activity dropped down. The number of listings is similar, but it's still very low. The number of active listings is up 2% over October of 2022. New construction is down 8%, 7.5%. That's just a different animal right there with construction costs, labor shortages, material costs. I'm not even sure how to quantify that number. The general consensus is with the rate increases, we're all assuming that there's going to be less buyer activity, which means if you're building new products, you probably are a little more careful than you would have been in the past. So the number of sales is down 8%. But you could also look at it, maybe there was just less inventory because of the material shortages and the land costs and whatnot. So I don't know how to quantify that, but new construction is down 7.5%. The median sales price is actually up 7%. So it's still, if you're a seller, you still have a product that people want, and the pricing is still better than it was last year. And last year was pretty hot time. Let me show you the figures from the historic figures. Try to wrap all this up here. So these figures I think are from 2000. Okay, actually they go back to from 1997. There we go. All the way up to 2021. So we don't have 2022's data here. At least it doesn't look like we do. But you can see that the median sale price is just kind of going up and up and up and up. And you can also see that the number of settled sales is at 38,000 sales for last year. And so right now in October, we know that the number of settled sales dropped by 30%. I don't know the total for the year, but even the sales slowing down, 30% drop, we're still just way above what we typically would see out of settled sales. Long story short, sellers still, again, have a product that people want. The rates have obviously going up have obviously affected affordability. And so now the question, I guess we went from, say, an extreme seller's market, people paying over asking price, nowhere near getting any kind of concessions, multiple bids on each property, to maybe we're just kind of getting into more of a quote correction. So I don't know if it's a quote doom and gloom, the way you may, if you read articles on a national scale. We know that the rates do seem to have affected buyer activity. We also know that we have very low inventory. I would think that if you could get your inventory up to maybe the 6,000, 8,000 mark, you're probably going to get into more of a neutral market, and then above that, it's going to be more of a buyer's market. So right now, it's still a seller's market. When I look in the MLS under certain price ranges, popular price ranges, there's just not a lot of inventory. So if you're a buyer, you're going to get more than likely than you got over the last year. You may have to pay more for it on a monthly payment. But is it better to pay, let's say the rate's 4% versus 6% on a $300,000 house? I'm just throwing quick numbers out here, but let's say it's $400 difference. So your payment may go up $400 to buy the same thing, but you may not have to, you may get closing costs, or you may not have to pay, I've seen 50, 60, 100,000 over asking price cash. So you probably won't have to do that anymore. So what's the better thing to do? I don't know. I guess I wouldn't be afraid of today's market. And if I'm a seller, there's not a lot of competition. So it's just seems like it's leveling a little bit as far as the power of the buyer and the seller. It seems to be the motivating factor behind movement is it a good time to sell? Is it a bad time to sell? So it's all how you look at it. Again, buyers theoretically don't have to shell out as much as they have been. They have more, they have more leverage. Sellers still have low inventory. And so that's kind of where we are. It'll be an interesting couple months. you can kind of see how the landscape changes. That's where we are. That's the data. A lot of different ways to look at it, but that's my take on it. Again, my name is Steve O'Brien with Redefy Real Estate. If you know anyone looking to buy or sell, let me know. My number is 757-285-8759, 757-285-8759, and have a wonderful day.